Ladies and gentlemen, it is time. It is time to do what has been needed. Well, I think it's needed to be done for a while. However, the market has not provided the conditions for this stream to actually occur. But now it is time. We are going to be doing a deep dive into a lot of small caps today. That is what this is all about. We'll talk about the market for like 5 seconds or 5 minutes for now, and then we will dive into the small caps. I have a pretty big list. This is, again, just my list that I have come up with and found and whatever. So we'll see what it looks like, and we'll pull a bunch of them up, and yeah, we'll kind of go from there and see what they look like. And then I want to look a little bit into some of the earnings, some of the financials on some of them, see what the best quality ones are. And then the plan was that I was going to pick like 5, hold them into January timeframe, set like 30% stops roughly, and then take profits at 50, 100, ideally more than that we can get on some of them. You'll still see some of these charts are just absolutely absurd. Maybe it doesn't work, maybe it does. That's why it's not something that's like, oh yeah, throw your whole portfolio at. It's going to be a small piece, spread it out, and that's it. But that's, again, something I haven't done in a long time. It's honestly been since this, probably like around this time last, well, there was maybe January last year was the last time I touched a small cap. So we'll see. We will see what's going on. Conscious. Yeah, I joined a prop firm recently. I've just been taking my strategy away from options and to shares, which has been good. Pretty much. It's been good. So we're just kind of doing that in the meantime. And I've gotten a much better place of, I feel like, splitting up the two mindsets of like portfolio is separate from trading the past 6 months. It's been like 9 months of just really operating one strategy and trading one strategy, which it's been good. It has been, but it's been a lot of ups and downs, a lot of learning, but it's been net positive. So I will say it's been good. And now it comes down, I think, optimizing it and getting better, which I think the move away from options has been a plus. So we'll see. We'll see how it goes. What's going on, Kyle? Afternoon. We're going to dive into the smalls. I want to dive into the smalls. So it's going to be, maybe people don't care. Maybe you do, but I have a list. How many? 30. There's 32 on this list, which we're going to kind of go one by one. And I'm going to kill a bunch of these off this list. I'd like to get this list inside of 20, honestly inside of 10. And then from there, I'll probably leave it larger than that. But then from there, pick my like top 5 or something like that. I'm not buying them today, but they'll be on a list, and then I'll throw, since I went to the prop firm, now I have my Webull account's been kind of just sitting idle. I think I transitioned it to like the cash management account or whatever, but it's been kind of sitting idle. So I'm going to be throwing some money at some of these guys in there, and kind of that's it. Trading shit is hard. I had 3 funded accounts. So hey, it is not easy, especially I feel like in these conditions. Blew them all in 3 days, dude. Well, I'll say I haven't been, no, next week is the week to do, like, I feel like is to do that kind of stuff, because you're going to get deals Black Friday for a lot. They're going to have, they're all competing with each other, right? They're all going to have massive deals on like, discounts on the prop firms. So like, that's the time if you want to get one. I was originally planning to do that, but then I just couldn't take it anymore with options. Not that I was losing. It was just like, I was having just kind of shit weeks of like, I looked back and like, well, this wouldn't have stopped me out based on the shares price, but because the option was down X%, I'm like, I got to get out. I can't hold this any longer. And then so it was just like pissing me off with that. And the spreads would be kind of a pain in the ass too. But that's how it goes though. The honest, like the ups and downs that you feel. Now, I don't rely upon that money. Like, I make money elsewhere, so I don't rely upon that money necessarily. Like, ultimately, yeah, it would be great to be able to pull from and stuff. So it's not like I'm stressing about that, but it still is a pain in the ass when you've been doing something for so long, and then you like on, was it Monday? I took like 4 trades and they all lost. And I'm like, this is fucking dumb. Like, I'm sitting here now. Pre-CPI, yeah, okay, I know, I get it, yes. But of course, the charts were there. So the charts were there. I'm not going to discount the chart. But it's like, You do something and then you're like, this is what I fucking get myself back into every time. And then you have a really bad day, and then you come back with a decent day, and then you can string together a bunch of decent days. And then you know that the down days are going to come. They're going to come. It's going to suck. But as long as you can minimize them and then handle it mentally, I mean, the good can outweigh, just like in a strategy, right? It's the mental ups and downs. They can, but it's not easy. A lot of people, it's tough. It's tough to do mentally. It really is. Passing on nothing. I had payouts, but consistency of FOMO destroys. I think that's, well, for me, my biggest thing is not big losses. It's the way I'll lose is by 1,000 cuts. That's how I end up losing these days. Is I'll string together good weeks, and then I'll have a day where I just end up, without realizing it, kind of fighting things and just fighting and taking an extra, So I'll justify getting in a new trade sometimes by just setting a super tight stop, and then being like, oh, it's like a 4-to-1 risk reward. I'll get in. Like, no, sure, yeah. And then that stopped me out. Now I've got a lot better, but it's a pain in the ass. But also with the prop firm that I'm running, I have been very conservative. Like, I would need to lose, I don't know what the math is, the sizing that I've been using, I would need to lose. I'm not going like big at all. I would need to probably lose like 3 trades a day for almost a month straight for me to hit the drawdown. So, okay, you can think about that and be like, okay, he's playing pennies. I make kind of, but like, I'm not, the risk reward I try to keep them as kind of how I was on the options account. And then now those slowly will increase. Like, I know I can move, I can play with a little bit larger size, but I don't want to make that jump just too quick. I want to slowly kind of get there. So I've been kind of very slowly playing it. So you could say, like, what's the point, right? But to me, it's like, I'm just going to keep doing the same thing that I was doing that was working in the prior months, and just trying to work through them on the prop account. Pass them, then we can work hard for him. That was a problem. Go on 2-week win streaks and then lose. Go on complete tilt. You don't want to know how much I was up in profit. Don't even say it. Don't even say it. Yeah, there was I think about that sometimes, because like sometimes like you have those shower thoughts where you're kind of sitting there and you're like, if I just say fuck it and the next 5 trades just triple my size, I can probably, if they work out, I could hit the goal, in 2 weeks or a week and then be done. And then, but it's like, then I'm like, I'm not gonna. Then it's just playing games with the head. But yeah, I have gotten a lot better at risk management from, like, let's say a year or 2 years back. That is for sure. That is for sure. Problem is that you can't do, and the one that I'm on, at least for what I trade, the fucking spreads. Oh my God. Like, you can't limit buy. You can limit buy and sell, but like, if I'm playing breaks, I'm usually playing momentum breaks. So it's like, if I'm playing that, then the problem is that we got to slap the ask to get in no matter what. But the ask is just like, it's at least 10, 15 cents above like where the current thing is trading. And so it's effectively a pain. I mean, I don't know if that's going to be the same way when it goes to live, because it's technically on a demo. You're on a demo. They put you on a demo account and then you can go, but that's the only thing that kind of pisses me off. But I think I've made a video on the one that I've been using, the good, the bad, things I liked, I didn't like about it the first month of using it. But well, the thing is, I went with a prop firm that I went with because of most of them don't have, like, you can't trade shares. Like, you can't trade like CFDs. Like, most of them don't have that, or they have shit availability or shit options. Like, the one that I have, they have a ton of different options. I don't really trade futures that much, not that much. It's mostly shares. So for what I trade, that's what it really came down to. There are better ones out there, but I got the 90%. I bought the 90% split. So hopefully come time, it ends up being okay, but I don't really care. It just comes down to what works for you and what you tend to trade more. Because futures, honestly, for what I've been, for my strategy, it hasn't worked as well as shares. I've got a better edge, and it seems to work better playing shares and playing higher time frame breaks on the stocks that I trade. And it's mostly like, there's like a list of 10 stocks that I trade really. But, well, I've actually expanded that into, for swing trades on daily time frames to a larger list. But for the most part, for day trades, this is like a list of 10 stocks. All right, let's jump in. So, okay, let's look at some of these small caps. IPSC. Okay, I'll add these to the list. Oh, let's look at those first, then I'll add them to my list, and then we can kind of go from there. AQMS. TradingView, don't be a freaking pain in the ass right now. Okay, let's refresh this shit. Here we go. Okay, so we are looking for, what I am looking for on these. Okay, now it's going to refresh. There we go. But for the most part, what I'm looking for is absolute shitty looking charts. Like, we do not want to be playing anything that is up at all. Like, because the risk reward in these things right now is incredible. Here's kind of how it looks to me, and people could say the same thing about like crypto. I don't really follow crypto, so I don't really get into the whole weeds of that stuff. But, which actually I do have an open Bitcoin position right now, but that's besides the point. It's like the same thing that people will look at for crypto. Like, you look at Bitcoin, Ethereum, the big names, the big caps, those things start to make a move. If they start to sustain their moves for a long period of time, eventually money starts to flow into the smaller caps. People want to make more money, and then you can have crazy runs. It's kind of the same view that we look at with small caps. So if the S&P, maybe it doesn't hold up, who knows? If the S&P goes to shit in the next 2 months, 3 months, this could kind of ruin the small cap season. It might not, but it very well could. So you could still get some good runs. I think for sure, but you still might see, if you happen to be in the names that don't run, they'll just bleed out. They will bleed out for the next few weeks. They've already been bleeding out. This is not a terrible looking chart, but like realistically to me, I want something that looks worse. Problem is that this has ranged down to 50 cents. It's at 95. So to me, what that says, and even recently down to 66, that says, 30% risk downside, maybe more, right? It could easily bleed out lower. So to me, not a bad, who knows, not bad, but I want something that's low. And ideally I want to see high relative volume as of late. So what we have on this is that we had some spikes back in the summer and it made nice moves. And this thing came down here. Yeah, it could have totally panic sold and now it's bounced back. Fair, but there's not a lot of like big volume spikes that I'm seeing here. So there's no one that I see is loading this thing or trying to be sneaky and loading this thing, which doesn't mean that doesn't mean anything necessarily. But I prefer, we've had better luck with stuff that is essentially drilling down to lows, or at least kind of basing or trying to base. But then you're seeing these like volume spikes. Volume is like tiny the whole way down. And all of a sudden there's some spikes randomly. And you're like, what's going on there? That's kind of what we're looking for. So you can do like scans with like a 2+ relative volume or something like that. But this is not something that I personally would be interested in. So doesn't mean that it's bad though. Doesn't mean that it can't run 1,000,000%. Hope it does. Okay, here we go. This is an example of one that I'd be more interested in. Why? Because the thing is essentially left for dead, right? The thing is down how much? This in just the past couple of months alone, right? Let's go back to the summer, right? This thing is down 56% since the summer. Go back prior this past year. Go back for last year. The thing is down even more. Absolutely destroyed. This thing is just like it's down 90% almost. That's more interesting. Is the relative volume perking up? Yeah, it kind of is. What do you notice? Like this whole way down, volume was pretty chill, and that's kind of what you see in August, September, and July anyway. But what do we see as of late? Better volume. So this is actually a one that I'll add to the list really quick. No, it already is on my watch list. Cool. So it's on the watch list, so we got it. LTRN. This is kind of one that's popping up right now, but it's kind of same idea. Didn't really see the volume prior to the recent move. Maybe a little bit of an increase, but not much. But like drilling down to lows, right? This thing went from, what is this, $5 to $240 in a matter of 2-3 months. It's like, okay, this thing got destroyed. And now you see it snap back. So the thing is, we're looking for stuff that's like on the way down, or like maybe hopefully basing. Maybe we catch the bottom, maybe we don't. I would like to put, I like to set 30% rough stops and put them at like kind of psychological areas, depending upon the price of the stock. But you see how this thing is already balanced. Like if you caught any of this move, I mean, that's potentially 50+% of a bounce that you could have caught on something like that if timed properly or if added properly. So that's pretty cool. Maybe there's more to it, but that's some good volume there. Not something that I'm going to add to the list right now, though, because it's kind of already moving. It's already up 50+% off the lows. I'd prefer to get something that's not up off the low, or that's on the lows. IMRX, not a bad looking one. This thing has come down to this 371. The problem here is that it's not there yet. It's at 5, so it has more room to come down. Maybe it never gets there. Problem that I have though with this is that there's so many other ones out there, in my view, that have done this. You know what I mean? And that offer a much better risk reward, like down here versus where this one is compared to lows. Now, of course, you can talk valuation and cash and all that shit. Yeah, I mean, you could talk all that stuff. At the end of the day, the market doesn't give a shit. It doesn't matter. You're not playing because these are good companies. Like that's the reality. Is you're not playing. You don't buy these things because they're good companies. They're shit companies, but the risk reward is awesome during this time of year when we see small caps tend to show some strength. And post Thanksgiving or Thanksgiving into Christmas time into January is when we see some really nice penny runners. A lot of the sub $1 stocks will move too, so that's kind of a focus into the end of the year as well, into January. So not bad. A couple there, but I will go through my list as well. Do I trade SQs and TQs? I don't really, other than hedging the portfolio. So I'll hedge my Robinhood portfolio, which I have a video on that soon that kind of explains the whole thing of what I like to do, what I've done in there this past year. It's up a shit ton. Not surprised because the S&P is up, but it's up a lot more than the S&P. But it's surprised me how much it's up with what I've been doing in there, because it's been pretty straightforward. It's been like, I have been essentially buying no individual stocks. It's all ETFs. It's selling covered calls. It's dividend ETFs. And it's like a rotation. And then there's a hedging mechanism that I explain more in that video. But yeah, I only will use those or SQQQ to hedge really. 10 stocks I trade really. Here's the trade list. It's above me. It's Tesla, IWM, Apple, Google, QQQ, SPY, Dow, DIA, MSFT, Microsoft, Meta, Amazon, Nvidia, AMD, and I'll watch futures of oil and S&P. I'd like to keep them on there to watch. But if I play SPY or QQQ, it's going to be probably the futures, but I won't play the shares of SPY just because I could, doesn't really matter, but I would do that only if I'm looking at like a bigger time frame. I'm looking at like a 1 hour chart, 4 hour chart, or a daily chart for a SPY or QQQ trade. Well, I would just go to the futures because they trade all night. So I pretty much can, set my stop and take profit and not have to worry about a gap down or a massive gap up or whatever on SPY or something. Over the weekend, that's where the risk is. So I would either lighten the position or not choose to hold it over the weekend on something like that. That's the list of stocks. So it's just the same list every day. And I pretty much pin them all together and say, okay, who's got relative strength, who's got relative weakness, and then kind of go from there. If one of them catches my setup, catches the eye, then we kind of look at it and potentially play it. So that's the deal. So here, AYRL, this is one that I have had experience in the past. A lot of these stocks, not a lot, but some of them I've had experience in the past, made or lost a lot of money on. I think I could go back in my Webull history and see that I made good money on some of these, but also in from 2019 through 2021, and then from late 2021 or second half 2021 through 2022, probably lost money on them. I don't know how much. I think I I definitely netted positive. I ended up losing more money when it came to options in that account, but the positives were in small caps, especially back in 2019. 2019 was awesome. You can say 2020 was great. 2021 was great too, first 2 months. But 2019 was the time to be alive. So, okay, this has earnings coming up. Do I really give a shit about earnings for these stocks? No. Generally speaking, it's not a big concern. Obviously, it is when it comes to are they going to go bankrupt or not. Yeah. So that's why I want to filter down through this list, pick the top of the list, or the top looking chart, or best looking charts, best risk rewards, and then from there look at some of their recent earnings reports, how much cash they have, are they at risk of going under, those types of things. So we'll look at some of that. Of course, you can only do so much to a degree. We have to assume that they are all going to go under at some point, and our game plan is to catch a spike or a bounce or whatever you want to call it. I'd say more of a spike, because these things tend to spike instead of bounce. Like a bounce is, for me, it would be more of kind of like, oh, here it kind of goes, right? Whereas we might just see a spike. The thing is up 100% in a day, and then you get the hell out type of deal. So I like this chart a lot, honestly. It's gotten some better volume, really, since, they had a reverse split, right? They had a 1-for-8 split recently. The float, does it tell me float on TradingView? Shares float is 4 million. They got a tiny float. Market cap is 8 million. I mean, tiny ass market cap, tiny float. That's one that kind of catches the radar. Hey, not to mention too, this thing has been a stock that has, in the past, it had some spikes. Now it's back in 2020. It's had some moves off the lows. It's had some pretty big moves. Nothing as of super late, which is honestly a good thing, to be honest. ACHL, this one is also one that catches the eye. Personally, this one reminds me a lot of Grill from last year. Grill changed their ticker symbol. I don't even know what it is anymore, but this one reminds me a lot of Grill. I love these setups where it's kind of like this descending wedge almost. What I would like to see is it snap down under here, give us the flush, and that is the buy. So what I'm going to do is I'm going to pop in here, and of course, it's not a guaranteed buy. That's when I would come back to look at it. If we cross underneath this blue line, I want to be alerted, and I will be interested in potentially picking something up. Volume-wise, relative volume, not really interesting. That's the problem, is like the volume is not really there. So the way I would kind of view these, let's say that you were going to have, let's say you picked five, let's say I picked 5 stocks, and I say, okay, I'm going to take $1,000, I'm going to expose $1,000 to small caps for this next couple months. And I have 5 stocks. Well, you can do the math. Okay, $200 per stock. Well, I would not buy that $200 in one go. I would probably split that across 2 to 3 buys. In my case, I'm gonna go with 2 this year. I think that's fair. So if I really wanted to get in ACHL and I really was like, I got to get in, okay, fair. Buy $100 worth right now. If we get the flush under here, you buy the second $100 worth, and then your average is somewhere in the middle. I set a rough 30% stop loss on it, and if it breaks that 30% stop loss, I get the hell out. Knowing that it could easily go below that and then eventually spike, but it is what it is. I got to cut losses somewhere. So that's kind of how I would go about it. So those two off the bat are pretty good. WISA also very freaking good in my opinion, because this is a stock that we've got freaking volume. This thing, I don't know what it's doing here. It's trying to hold 13 cents. I don't really care. Let it go to 10. I don't really know. But what we see is volume. This is nice. Not to mention, WISA has been a stock of the past that we have talked about back in literally last year, if I'm not mistaken. Yep, like we literally have the chart from literally last December to January when it had this wedge, held this level right here. They've had some splits since, and the thing spiked. What is that, 100% from this? Yeah, 150%. Like that is exactly the thing. But go back in time, and what you'll see is we start now. You got to go zoom this thing back in. It's not super clean because there's some other skewed volume. What do we see? We started to see some perks. Like the volume was super low. We started seeing some perks in volume prior to the big move. And that was kind of telling. What we have is like absolutely very clear. So like off the bat, and that's the top 3 off the list. I would be kind of comfortable picking these top 3 already and feeling pretty good about them into January. That's just my take. This thing already spiked from low to high 72%, like on one of these days, a couple days ago, which is nuts. But that offered, like when the things are so thin, it's a 6 million float, market cap is sub $1 million, which is nuts. When the things are this thin, I mean, it doesn't take very much volume. 24 million shares is a lot, I guess, but it's a cheap stock at 13 cents, so it's not that much money. It doesn't take a lot to move these things. Definitely the broader markets take a breather and small caps start moving. I hope so. It'd be cool. I mean, and I don't really care what the way I'm gonna view this is like I'm literally like in the past I used to like look at these every day and go, oh my god. I will literally just set alerts and I do not care. So I'll set like whenever I buy, that's the other thing too. Let's say that I buy WISA. I'm like, okay, I'm gonna buy it. Say I buy it here. I'm like, okay, I'm gonna buy some here, and then I would reserve some for a flush, because if it flushes these lows, I would be interested in that buy. Now this is like completely reversing the psychology of like buying support and stuff, because you kind of what you almost want in this space, what you're looking for is find a spot where people are like, oh hey, we got support here. I'm gonna put my stop loss right below. Find that spot. Once those stop losses get hit and triggered, then you want to buy in. Like that's in a perfect world what you want to do. Doesn't always work. Where oh, support's really nice, and then it's going to bounce off the support and go for 100%. Like it's the reality of small caps. They're manipulated so much. This could easily snap down below and then snap 500% from the lows, from 10 cents and go to 50 cents and go 500% off the lows. And you got stopped out because you got in at 13, stop loss at 10, and then somebody else just sucked those shares up and made a shit ton more money. Like that's how this stuff goes, and that's the reality. So keep that in mind. FNCH. Now, you don't need the S&P to hold up and do well, I guess, right? You don't need that for small caps to go this time of year. However, it would be nice, it'd be helpful if you had a market that was not flushing lows and, people will kind of start rotating the smalls. There's not like, I like it, but we don't really have, there's no like volume right now. Not like there's no volume. So it's like, chart wise is great. Chart's great. I like this chart a lot. Just a stock that is like, and the same thing happened here. I mean, like when it bounced, when it kind of fell down to this area right here, and then it snapped. What does this move? About 100%. About 100% move. So you're looking for that spike. And a lot of these spikes too as well can happen in pre-market hours and after hours. So what, like I was saying before, let's say I bought in, I don't think I finished this thought. If I buy some here, I'm immediately going to set sells. I will set sells for a small amount at 50% and then 100%. And those will be my first two sells. And then if those hit, I'll be alerted by, a notification on my phone, and I'll come back and check in. Holy shit, it's up 200%. I'll go sell some more. Like that's kind of how I view it. You could set alerts too, but I just set the sells. And then I usually will set an alert for down at whatever price point is the stop loss. And then I'll come back, check in what's happening on that day, and then sell it if I want to sell it on that day. You could set a hard stop, I guess, to preserve more potentially, but that's kind of how I go about it. So far, that was not bad, but no volume yet. NXTC, another one of those absolute pieces of shit that we've played in the past. Risk reward's not bad, but it was down under $1 recently, which seemed to be where the buyers seemed to be where some volume came in, or at least we got some better volume on that flush. And since then, it's been holding up. So personally, it's kind of making too big of a move off the lows that I don't think the risk reward's really great, because it could easily fall back under $1, and then that's risking 30+%. So it's like, So if you had caught it earlier, I think it's not bad, but now, let it do it. Let it go off on its own. Bolt. We had looked at this one in the past, as we can see. It is a 24 million float. It's much higher than the ones we've been looking at. That's probably why I won't touch it. It's at $1. It doesn't look terrible, but I'm gonna probably leave this one alone because it doesn't have a lot of history of hard spikes. Could totally go for a crazy hard spike. But let's see. This volume is on this little spike. There was some higher volume here around where it's currently trading at $1. Seems like this dollar area is holding, but it's trading like a barcode, which I don't really like stocks that trade like a barcode too much. You can kind of see what I mean by like it's just like very it's very just algos are in control of it. Just trading it up a cent, down a cent, up a couple cents, down a couple cents, and just kind of cashing in off of it like that. I don't know. I'm gonna get rid of it because I'm just not liking the vibes. Not that it's bad, but for me, I'm just gonna leave that one alone. There's other better plays, I think. IGC, here we go. This is one that's been a piece of shit that's made some pretty big runs in the past. And I say that again in a nice way. I don't mean like I have no idea. I don't really care at the end of the day about these companies. This is just you're playing a game is what you're doing. Had some decent spikes of volume over the past couple of months. The recent one in late October was pretty decent, and the move wasn't much. Got to like just shy of 40 cents. Now it sits here at 30 cents. Let's broaden this chart out. Yeah, a lot of barcoding there. The only reason why I like this one more than Bolt is because the volume's better. So, and I have prior history with the stock. And if you look back to the left, look at you might not be able to tell, but like these are what we're looking for. Like this. Like these little spikes are what you're looking for. Let's look at the size of some of these though. This one from this low to here was about 190%. So these are not that crazy. These back in here, 2021, these are pretty big. So I'm going to leave it on the list just because the volume's decent. Or there's some better spikes in volume. Meds. Oh man, meds can spike like a freaking beast. I like it for that. Like, look at the spike ability just even in this year alone, which has been a shit year for small caps. Like, look at these spikes. There's been like, you could have gotten in meds into some of these lows and gotten out on these spikes every single time and made money, which there's just providing you a million opportunities, which is why I kind of like having it on the list. Although I prefer if it was down at making a new low. That's what I would say. I prefer it making a new low. I'm going to leave it on the list, but I would like it more if it was making a new low. GROM, GROM, big gap to fill to the upside after a reverse split, I believe. This thing has a 1.4 million float, market cap 1.8. How's the volume? Well, obviously it's kind of skewed off this pop. How much was this pop? From low to high was about 100%. I think the gap fill would be closer to 200% from here. Would be, yeah, 215% roughly. So let's bring this out. Let's bring this across. That's why it's not, that's the gap, the massive gap to the upside gets me interested in it. I'll leave it on the list. It's tougher to tell the volume, but because of this skewed up spike right here, 33 million a day, but not bad. LGMK. Logic Mark. Spiky. I like it. I like the spikes. We have some spikes of volume. Nothing crazy, but some spikes that have popped the thing nicely. So here it was from 2 to almost 3. Not bad. Nothing insane. Not a massive move. But decent spikes nonetheless. And from like last... I mean, this thing is down so much. Holy shit. Yeah, I like this one. It's down a shit ton. And these little spikes of volume interest me. And there's even a gap up here to 680. Like that's a big move, but we had a couple of those last year. We were in one or two of them that were like, there was one that was 600%, I believe. I recall looking at my account and seeing it up plus 600 and something percent. I remember seeing that. It was nuts. SECO. I mean, hey, could be good. It could be if it bounces here, but this is already moved. It's already spiked huge. Like the potential that we're looking at is this. Like this thing going from 28 cents to 280. Like fuck yeah, 800%. Like that is the potential that we're looking for. But it has just done it, so chances of it going again low. It's made some big moves in the past, right? You've seen it do. It had a big spike, came back, built a higher low, then it did it again. But I mean, you lose a little bit of your power. So I'm gonna get out of this one. Hey, not a bad one to keep on the radar, but I'm gonna get it off the list because it's already pumped. DCFC, holy crap, this thing is getting destroyed, which is good, and it's got volume. I like this chart because it has got volume. So relative volume has certainly picked up since late September. We can see that is better. Okay, we'll keep it on the list. ZENV. It's made a move from sub 70 cents to 125. No, it's already up too much. Get out of it. Get out of that. We look at IPSC. I like that chart. JAGX. JAGX. So it's already kind of popping here. which is unfortunate. But it's the same idea, right? This thing went from 23 cents to pop. It went over 120%. And now it's popping from here. I think it's one to keep on the radar, but it's just tough for me. I honestly, I'm going to get rid of it because it's just tough for me to look at this and say that I would not buy this up here. No way. There's no way. REVB, RevB. Jesus Christ. It is, when you like step back and look at these charts, it's like, holy shit. Why you don't invest in these companies? You just trade them, and that's it. I mean, I like the chart just because it's just absolutely dead in the water. There's nothing happening here, but there's no volume yet. So it's like, yeah, I'll wait. I would wait. PIK. Okay, here we go. PIK. This thing had a nice support at 54 cents and it has bounced multiple times off that level. But guess what? We just fell through that support. And people's stop losses have been getting hit. And guess what happened on that move? Volume perked up. So hitting stop losses makes sense. But you got better relative volume the past couple days even here. So I actually like this one. It's kind of like that perfect storm of like, you just fell underneath a really nice support. Now is when no one wants to buy it because it looks like shit, but this is exactly when you would want to buy it. NVTA, next on the list that I've got here. I guess earnings, recently had earnings, so just snapped it down. It's got decent volume past couple months. Better. Don't really love it, but we'll leave it on the list, I guess. Oh, wait, no, never mind. 278 million float. No, I'm not doing that. There's way lower float stocks out there that are probably better risk rewards. PLBY, Playboy. This is a one that I want to keep on the list because it just could be one of those stocks that like I could see kind of, I don't want to say a meme run, but it's at 40 something cents. If you were to go back to August of this year, literally a couple months ago, it was at 180. If it were just to recover from here to there on a spike, that's 200%. That's a massive move. This is a 48 million float. I think it could be worth leaving on the list for the memes, but also you just had, really nice support holding at 58, 59 cents. It curled off it and then snapped below. You don't have a ton of volume. You got some volume on this move down, not a ton. So, but it's kind of like one of those, just like, oh, it's left for dead. And then that's exactly why you'd want to buy it now. Almost. It's kind of like the reverse psychology idea. VISL. Fuck this stock. This is a piece of shit company, but like anything, you can make money off piece of shit companies. This has been in a complete downtrend since 2021. So for a couple of years, but it's had some decent bounces off the lows. You are potentially looking at an opportunity to get it off of a pretty nice risk reward if you were to risk these lows. Where it is, it's currently up about 18% off its low. It's not bad after a decent move down, and there's some better volume. It just had earnings out the way, so some better volume on this move down. Today's got some decent volume as well. We'll leave it on the list. NUWE. I like this one because of the volume. Yes, this one is just because of volume. Look at the volume. Past couple weeks, volume. So yes, it's down from 127 down to 63. Oh my gosh. But the volume, I like the volume. So we keep it on the list. AGRI. We still got like 10 to go. Holy shit. We're making our way. This one, let's see. At lows. Oh man, the volume is better here too. So you got some better looking volume as of late. Down in the 123 area. Not bad. We'll leave it on the list. AIHS. Drilling into lows. I like that, but not really a ton of, relative volume. Some, but not really a ton. ALZN. We have, after a recent 1 for 15 split, I believe is what it just said. Let's see. Is that what it said? Yep, 1 for 15. Got some volume, got a gap to fill up here towards 250. Not bad. APVO. Same kind of Why does this look very similar to NEWE? Did I look at this one already? I feel like I did. Either way, APVO, this looks very similar to something that I feel like I just looked at. But either way, I had a spike, little spike right here to 50-ish cents. Then it's now dropped down to 15 cents. Holy shit, in a matter of a month. With better relative volume, I kind of like it. Honestly, I prefer there's probably some good moves in the $1 to $2 stock range, but I kind of like these cheap names, sub 50-cent stocks. I feel like there's better risk reward there. AQB, Aqua Bounty Technologies. Literally making a new low of the year as we speak, but on better relative volume since the reverse split, which kind of makes sense. So I'll let this one kind of drill down further, and maybe it goes more. We'll see. ASTR, oh, that just kind of popped up. Astrospace, I'm going to get that off the list because it just popped. Cool, though. Made a nice move. CMRA, cheapy, sub 25-cent stock, right around 25 cents. Just had a little spike in volume up to about 4. Yeah, I kind of like this when you got these little, this is where you can see someone's loading it. This is what this looks like to me. Someone's loading it. Someone's loading this thing. So I like that look. EVLO. Kind of a similar look, right, with this volume as of late. Someone seemed to be loading it a couple days ago, and now it's popping back up, but it's way too much off the lows. I'll leave it up because it can easily fall right back down, but it's a really nice chart, potentially. Gap to fill to 3 almost. Oof. JVA. Decent volume. Notice the key here. We got volume. NRSN. Same thing, right? Spikes in volume, perk in volume. I like that. MMAT, Metamaterials. I honestly only reason this is on the list is because it has run the past. The problem is that you've got a cult following to it for whatever reason. So I don't like that, but it's a 10-cent stock. I mean, it's 9-cent stock. So Meta could come back, or Metamaterials could come back to 20 cents, go 100%, 100+%, and still have the entire investor base underwater, and you can make your money and get the fuck out. That's why it's on the list. Some better volume as of late, but so there you go. Do you still like Adobe? Yes. Big picture, that is still a swing that I am holding. Let me just double check my position on it. Yeah, I mean, I'm currently up on it, not by a lot, but I'm up. I trimmed some. But yeah, it's holding over the breakout, so no reason to sell it for now. SDOT is now Grill. Let's see if S dot could be a second. Play it every year. Is it playable every? Oh yes, look at this. Off the earnings dump. But then you look back to the left and it has this mat. No, not as cool. I like when I see that. I'm like, oh yeah, but not as nice as it may have been. Like we were looking at it, right? Like the chart we were looking at literally was this, right? We were looking at this last year. It pulled this little breakdown under that support, and then it went on a massive run. How much did this thing go? It went 200 on the first push, and then it peaked at nearly a 400% gain from the low. So talk about a fake out and then a rally. But no, I'm not going to touch it now. So unfortunately, she doesn't make the cut. But yeah, that is the list. So the ones that kind of stick out to me were some of those higher volume stocks. So I'm going to write these down in front of me. I'm not getting in any of these now, but I'm going to write these ones down. This took a lot longer than I thought it was going to take, but I'm going to put this as a small cap. Small cap. Ooh, let's go with list. WISA, I believe, was the first one that really caught my attention because of the volume. This is a beautiful stock because it is a piece of shit, but it likes to run. And we have volume. Someone is potentially loading this thing as it looks like it's going to shit the bed. I like it here, potentially. And then if it breaks down under these lows for a flush, call it a final flush, call it whatever flush you want to call it, for a secondary add, and then a hold for 50 to 100% plus type of move. So The general rule of thumb in these is I like to hold them, or I like to try to get in at the relative lows or near bottoms. There's no way to time the absolute bottom. And then you get in towards the bottom, you could then risk 30-ish% to try to make well north of that. 50% is honestly cutting yourself a little too low potentially. You could be looking for more than that. But I still like to put a small sell there just to trim something off, just in case it doesn't go 100%. So WISA is pretty high on the priority list, I would say, for me. That's a nice chart that we got there. Back to some of these. It was CMRA that I liked a lot as well, right? Yep, because of the recent spikes in volume, someone has been loading this one. I'm going to put this one as the next one. These are not, there's in no particular order, but these are the ones that caught my eye. And I'm going to look at these quickly in terms of, I might make like a list of 6 here. And I'm going to look at some of these for, call it some due diligence, if you will. Yeah, NRSN, I like this one a lot too. I mean, you kind of like, I just like this theme that we have down here of this like spikes in volume. You know, someone's been doing something here. So those are 3. Let's go back through. We look at AYRO. I didn't mind that one. ACHL. I do like this one, but I prefer it to break under that low. So I'm leaving an alert there. Let it break under that low, and then I'm going to come back to see it. FNCH, you could make the argument that, hey, it technically broke under these lows yesterday with this big lower wick, and now it snapped back up, but there's just not a lot of volume. It's just very low volume, so I just can't really wrap my head around playing that with low volume. I'm just going to go through some of these quick to see if there's anything that really catches the eye. IGC, I think it's probably worth a shot because of the spike ability. I'll put it on the list, and it's been a good stock in the past to maybe it's not to me necessarily, but it's been a good one in the past that I've watched make some pretty big moves. Grom honestly looks interesting down here, but I want to see a little bit better volume. LGMK looks pretty interesting as well. That's a spiky looking chart. I kind of like that look. I'll put that one on the list. Let's see. This one I think could easily, this just like looks like a bear flag setting up, so this one might be going down for more. But hey, the volume is getting there, so either way, the risk reward looking interesting. IPSC was interesting to me. Very interesting to me, although I kind of just want to stick with the super cheap names instead for now. Just because I feel like we got better risk rewards in the super cheapies, like the sub $1 and like the sub 50-cent stocks. Oh yeah, PIK. PIK was another one that I wanted to add. Okay. I think that's enough. I mean, we can always, like, this will be my kind of running list that I'll just jump back to. But I think this is good to kind of just do, that looks good too. Some of the spikes in volume. And they recently had a split. I'm going to leave it. Let's just leave it alone. EVLO really quick. Oh yeah, okay, that's good. So I think we got what we were looking for here. Yeah. So now let's go to Seeking Alpha. So the plan is that I have that list of like whatever I have on that list, 30-ish, a little bit under 30 now. And then I brought it down to a couple that I have, but these are not like, don't have to buy them all, but I'm now going to look in some of these and to see recent PRs, news, like all that kind of stuff. So let's look into some of this stuff here. So WISA, Q3 revenue rebounds 81% from Q2. We're not looking at this and saying, oh my God, like these are the best companies in the world. Let's buy them and hold them forever. I'm looking to where they say cash. Okay, cash. Cash operating expenses. Did they not? Revenue was down. I want to see how much cash these guys have. Okay, we can go to BAM SEC. Almost forgot the name of that site. It's been so long. Let's pull it up. Let's see. WISA. What is today? Today is the 15th. So you go into here and we type in cash. Cash and cash equivalents. As of September, and this is unaudited, so it could be just absolute bullshit. 200. Oh, that's not great. So they have $200,000 cash. Not good. So what that says to me is this company will likely, if it spikes, immediately do an offering. That's the thing. And that's why you get the hell out of these things pretty quick. So not a lot of cash there. But again, is that big of a deal? I don't know, man. I mean, the market cap on WISA is literally like fucking nothing. And the market cap on this thing is 900,000. Ideally, we were looking for the ones that have more cash than their market cap. Was like kind of a theme last year, I want to say. Not the theme, but kind of like a rule of thumb. Doesn't necessarily matter, but you'd like that. So not the best. But all these stocks are going to be shit. So it doesn't really. I don't really think it matters that much. Let's look at the next one. CMRA. So that one is not promising, not great, but again, what do we expect? Recent PRs, board of directors, what are this recent results? Let's see if they got cash. Comruck continues to generate significant momentum by expanding our patent portfolio, strengthening our cash position, and advancing key partnerships. Cool. How much cash do you have? Okay, 1.8 million in cash. We'd like to see it. 1.8 million in cash, this bad boy. And their market cap is 7.6 million. So substantially under that. But hey, 1.8 million might go a little bit longer. Now you got to look at their expenses and stuff. So let's see. Revenue of 136,000. That is terrible. $1.9 million in expenses. So they're burning through money very, very fast. They got that down a bit. Net loss of 2.2 million. Well, $1.8 million in cash is at least something there. It's not bad. It'll probably hold them for a couple months before they got to do something. So, yeah, they're all gonna offer it. I mean, the reality is that they all got to offer. And that's the thing is that the last hope for these companies that they need to do offerings. They need to spike their stocks in order to offer, so that they can stay alive. If they don't, they're going down. So that's kind of the thing that we're at. So you could get a good move off some of these things. Phase 3 data. Hey, look at that. Let's look at NRSN here on BAM SEC. I don't want to waste. We won't waste too much more time, but it's kind of the general way we're going about this. Honestly, as much as we look at this stuff, it doesn't really fucking matter. Like, in the grand scheme of things, like doing the DD, yes, it's good. Yes, it's probably smart, but like, it doesn't matter. Like these things can move however they want to move. They can do whatever they want to do. And this is the most recent report that we have. Negative cash flows. I'm seeing a lot of negatives. $5.6 working cap. This is like so outdated though, so it doesn't really. Okay, not great on that one. NRSN, IGC. Let's look at IGC. So far we're kind of on these, and I'm not surprised, but we had much better luck looking at this stuff last year in terms of getting some decent, being able to find information, and then I hope that's in thousands. Hopefully that money that this is in. I would assume it's in thousands, right? So that means about $3 million in cash here. Please don't tell me that's $3,000. It's got to be in thousands. Yeah, in thousands. Okay, so IGC has about $3 million in cash. Okay. They have a float of 49 million, kind of high. Market cap of 19.5 million, also kind of, well, higher than the ones we were looking at. Not terrible. That's honestly not bad. Logic Mark, LGMK. Next one. There we go. Oh, they're announcing on the November 9th, which we've got right here. They don't mention, oh, they did. Cash, hey, 6.7 million. Let's go, baby. There we go. On, what is this one? LGMK. There we go. Market cap on this guy is, oh, is that right? 2 mil. Oh, we got to go on here. $2 million market cap, and they've got 7 million, or they got 6.9 million in cash, 6.7 million in cash. I like it. I like it. That's my favorite one for now. Next one is PIK. PRs, let's see, yesterday, a lot though, because we got earnings season right now, it's a good time to be checking this stuff. Okay, we used to substantially reduce purchases on new inventory and focus on increasing sales for our current elevated inventory level, which we believe will support our cash flow needs in the short term. Blah, 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 blah. Who cares? 55, is this in thousands? Please tell me it is. No. No, it's not. These are actual numbers. Okay, so they have $55,000 in cash, and they had $600,000 in cash like 9 months prior. That's terrible. So they are fucked, essentially. But doesn't mean that stock can't spike. So that's a thought process to think about too, is that as much as these companies look horrible and look like they're going to shit, as many of them will ultimately in the eventual long term, if they can milk out, you know, some juicy PRs, a spike, a pump, this or that, to bring in people to buy their shares and then to do an offering, drop money on your ass, and then raise some capital so that they can stay alive, they're going to do that. So they're going to at least try, I would suspect. So I as much as like this stuff is what I used to care a lot about, I don't really think it matters. So they got a 180-day extension to meet NASDAQ minimum bid requirement, and that was as of September 21st. So they got plenty of time. That gets you out to, I don't know, did the math on that, March 22nd. Oh, sorry, no. That puts you out to into next year. So you got 180 days. So you got to look at some of these too, which is something to make sure we pay attention to. But they essentially have to get over $1, so they're going to reverse split. But ideally, what you're going to want to do is you're going to probably want to spike the stock, offer, then reverse split. But we'll see. 3K. Hey, this is how it is. So my favorites would probably be LGMK because of how much cash they have. So I can feel safer at night going to bed with money in that position. Now, of course, I'm not buying this shit necessarily with a lot of money. So I'm going to probably play maybe by the end of this week. Actually, probably by the end of this week into next week. Before Thanksgiving, I will buy my first piece in probably all the small caps that I want. I don't think I'm going to have more than 5 at a time. And when I say 5 at a time, like if one of them spikes or one of them goes to my stop loss and drops 30%, then I open a slot for a new one, you know? That looks good and meets the criteria. And really, we don't have a lot to kind of go off of. Once we start seeing more, if we start seeing some of them spiking, we can kind of get to like, oh, there's a theme here. Oh, there's a theme. Let's play the theme. So That's kind of my thought. But it'd be something like this. I do like WISA because I've played it before in the past, and then just the way it trades, I kind of have a feel for it, and I like the volume. So it's probably that, and then CMRA looks interesting as well. So that's kind of where I'm going to probably be looking. But yeah, that's the deal. So not a ton, but still could be a few bucks to be made. So let's see. Outside of small caps, what else happened today? 10-year bouncing back a little bit. Retest, or at least back of retesting half the move, or retracing half the move yesterday. The dollar a little bit as well. You got Bitcoin up 5. I really like the Bitcoin chart here. Got a resistance level that we're testing. You had snap down yesterday and then immediately snapping right back up. I like that a lot with like a stop below this low. So you're doing 5,200. Probably something like that. I think 200 or 300 is probably the number to be safe-ish. I might buy. I don't know if I'm gonna get 5. I might start with 3, and then I can add depending upon how the market is. Just because the list that I have, I don't really love all of them, so I kind of have 3 that I like: LGMK, WISA, and then CMRA are my top 3 that just chart-wise look the best to me. So I'll probably start with those 3 and probably do 200 each on them, and then add if they drop, but only add one more time, and then 30% stop from there. So that's kind of the thought. Tesla gap filled. Yeah, I traded Tesla today. That was in the trade recap. But yeah, I traded Tesla today. Filled the gap up into volume now. So, I mean, who knows what's going to happen up here. Coinbase looked pretty strong because of Bitcoin. Silver crushing it. Gold was down, but silver was actually killing it here. Silver looks interesting. If silver can get above like these highs, why not send it up towards 25, 26? Well, we'll see. It looks interesting though. Other than that, yeah, so the swings that I currently have on shares is Adobe is one of them. Don't love that upper wick on this week's candle, but holding the level. If it falls back under the breakout point, I will get out of it on Adobe, but it's still above it, so I'm going to let it do its thing. It's a weekly time frame, so it's not really there's no rush. Same thing with Meta. Meta's a weekly chart. Just breaking out slow. So we'll see. There's just no rush, I think, on these. If the market's going to give us a good rally into the end of the year, these will do well. If it's not, then we'll get stopped out fairly soon. Hopefully fairly soon, so we don't have to wait around that long. But that's really it. It's not a lot. I think yeah, I have a video coming out on the portfolio. The Robinhood portfolio, which is currently up 57%. I think I'm in the video is up 54. It's currently up. So my view on this is I'm not going off the portfolio, but I'm going off SPY, or SPX. So if the S&P looks pretty good. Like if the S&P snapped back pretty fast here, if we were to eclipse the all-time high, that's cool. But if we were to do it with like a big move, like if we get up in here, into the end of the year or early next year, I'm just saying, like the incentive for me to want to be long the S&P is extremely low. Like, yeah, okay, maybe it can go and squeeze out and have a crazy run, right? Even higher. Maybe it does some crazy shit like that. And this is all hypothetical. Maybe it does. But if it does, again, like it'll probably eventually come back and chill. And then when it does, now you got better opportunities and better deals. So my view is if we eclipse these highs substantially, I will likely sell my entire portfolio, or at least all of my stock / ETF exposure, and then, or slowly trim out of that stuff, and then pay off my loans, and then just be done. Like, and then just rebuild the portfolio when the market sucks again. You know what I mean? Like, that's kind of my view of my Robinhood portfolio. So it's been doing great, but the reality is that this is not sustainable if the market, it's just because the market's going up that we're doing well, but that's the deal. So we will see what happens overall. That is today's stream. Hopefully it was helpful. Hopefully we got some small caps that may be interesting. We'll refer back to this. There'll be new ones. There'll be other ones. I'm sure there'll be many more where that came from. There's a million out there. So do not just think that these are the only ones and the best ones. I have no idea what I'm doing really at the end of the day. We're just going off of what we've seen, and we're going off of the past runs we've seen in small cap land. So go on the Ramsey show. Yeah. He would love paying off the debt. No, but what did he have? He got under fire recently because he was saying that you should withdraw like 8% of your portfolio every year. Or something like that. Withdraw 8% per year and you can live off that the rest of your life when you retire. And people were doing the math of like all these different like calculations. The reality is, like, I think for a lot of us, like, we have some like relative common, I don't say common sense, but some financial sense of, and market sense of like sentiment, what's oversold, what's overbought. So like, to me, right, we rip up to over 5,000 on the S&P. If it happens fast, again, I've been kind of saying that this past year. I'm like, hey, if the S&P goes over 5,000 by the end of this year, I'm out. Fuck that. I'm not in the market anymore, and I'll wait for it to come back down before I start dollar cost averaging back in. But that number, like, the longer that time goes on, that 5,000 is not as crazy anymore, right? So now it kind of needs to be a little bit more. So I think we need a decent push over 5,000 for me to get like totally like out. In the meantime, if it did get up there, it's probably a spot where I'd consider a hedge, but if it, and that's really it. But if it really, really rips and the portfolio is crushing it, I prefer to sell on the way up, and even miss the top. I don't care. Sell on the way up. And then, because it just makes sense with the interest rate that I have and stuff to kill that, crush that down, and then be pretty much almost done with the loans, and then be like, okay, now I pay them off every month. What I was paying, more of that money is now being applied to principal, so it's accelerating how fast I pay that off. And then once that's paid off, now I got all this money that I was paying to the loan that I now have as like extra income that is now going to be all invested into a portfolio. So I can build the portfolio back up pretty fast. I'm not like worried about that. And ideally, you want to build the portfolio in the shitty times versus building it in the good times. It's when you want to just reap the rewards, sell covered calls, get some nice dividends, and let the thing go versus, whatever. So with that said, thanks so much. I will see you guys on Friday.